Welcome back. Right now, in early 2026, the global economy is, well, it's sending some seriously mixed signals. We've got our hands on a new financial analysis that claims this isn't just random market noise. No, it says we're on the brink of a major turning point. So today, we're going to break down exactly what this report is saying and what it could mean for all of us. Okay, so let's just jump right into the puzzle. Take a look at these numbers from today, February 2nd. On one side of the world, you've got the Dow Jones absolutely roaring towards a record 50,000 points. Pure optimism, right? But then, look at this. On the other side, South Korea's Kospi index just took a nosedive, dropping over 5% in a single day. I mean, these two things just don't seem to belong in the same reality. One market is popping champagne, the other is hitting the panic button. So this crazy imbalance, it's the central question, isn't it? I mean, how can two major economies, which are deeply connected, be moving in completely opposite directions? The report we're digging into today argues this is way more than just a one-day blip. It might actually be the first tremor before a much bigger economic shockwave. So the big question is, what's really going on underneath the surface? All right, first up, the report points to a massive fault line, and it runs right through the world of artificial intelligence. The analysis calls this the Great Filtering of 2026. You know, the report basically describes AI in 2026 as having two completely different phases. It's like a tale of two halves. The first half of the year, pure euphoria. Everyone's talking about a productivity revolution, incredible new platforms, it's all upside. But the analysis gives a pretty stark warning. A reality check is coming. It predicts that by the second half of the year, investors are going to start asking some really tough questions. Like where are the profits and how secure are these systems? And that could trigger a massive, sharp reevaluation of the entire AI sector. But it's not just about tech. The report points to an even bigger wild card, a single person who could change everything, the man nominated to be the next chairman of the Federal Reserve, Kevin Warsh. Okay, so to really get what's at stake here, we need to quickly talk about two key terms you hear all the time, hawk and dove. Super simple. A hawk is all about fighting inflation. They want to raise interest rates to cool things down, even if it means slowing down the economy. A dove, on the other hand, is focused on growth. They want to keep interest rates low to keep the economic engine running. Now, here's the problem. With Warsh, nobody is 100% sure which one he's going to be, and you better believe the entire global market is hanging on his every word to figure it out. And what's really interesting is that this report actually tries to quantify this uncertainty. Now, historically, Warsh has a reputation for being a hawk, but look at this. The analysis assigns a 60% probability that he'll actually pivot and become a dove. So why the flip? Well, the report points to one major factor: incredible political pressure from the Trump administration to keep the economy roaring, which could essentially force his hand. But, and this is a huge but, we can't ignore the other side of that coin. There's still a 40% chance of what the report calls a worry shock. This is the scenario where he basically tells the politicians to take a hike and asserts the Fed's independence, acting like a true hawk. The report says this would mean he'd start pulling money out of the financial system, a process called QT, and do it fast. That would cause interest rates to spike. And for all those high-flying tech stocks, the ones with sky-high valuations, well, that would be like pulling the rug out from under them. The model here predicts a painful valuation reset, with the Nasdaq and the chip stocks potentially correcting by more than 20%. Ouch. So, let's put it all together. What happens when the uncertainty in the AI world collides head-on with the uncertainty at the Fed? Well, the report lays out a pretty chilling scenario for how these two massive forces could combine and potentially trigger a crash as early as this month. The report walks through a potential chain reaction, and it's like watching a set of dominoes lined up to fall. It all starts with a trigger. Let's say some unexpectedly hawkish comments from Warsh, maybe at the same time we're hearing talk about a U.S. government shutdown. That's the first domino. Then the next one gets hit. A major AI company reports a huge security breach or just gives really weak guidance for the future. That accelerates everything. The U.S. tech market starts to sell off hard, and that triggers the real problem: contagion. The selling in the U.S. forces investors to sell assets in Asia to cover their losses, and the whole thing just spirals. It's a really plausible and, frankly, pretty frightening scenario that shows you just how fragile and interconnected this whole global system really is. Okay, so if we zoom out a bit from that immediate crash scenario, what's the report's big picture outlook for the rest of 2026? It's a mixed bag, to say the least. For the U.S., they're forecasting a really volatile year. Europe, kind of stagnant. China and Hong Kong, they're looking at a prolonged L-shaped slump. But there is one potential bright spot. The report points to India as a market that could actually outperform everyone else, possibly thanks to some new trade deals. So, if you had to boil this whole dense report down to one single idea, this would be it. The core thesis is that 2026 is not going to be business as usual. It's going to be a year where everything, from AI stocks to entire global indices, gets a fundamental rethink on its value. The report calls it the year of the great re-rating. So, you might be asking, how on earth do you navigate a year like that? Well, the report's conclusion has this pretty powerful piece of advice. It says, only cool-headed rationality, not blinded by greed, is the sole weapon to survive this turbulent field. I mean, what they're really saying is that in a year that's going to be full of emotional extremes, the most valuable strategy you can have is just to stay calm and think clearly. And that really leaves us with one final massive thought to chew on. What we're witnessing here is two historical forces colliding. The dawn of a true technological singularity with AI, meeting the peak of a massive financial cycle. It's a wild combination. And their report really just leaves us with that question. In the face of all this, with these huge opportunities and equally huge risks, how will you prepare?